One, two, three, and welcome. Another edition of The Price is Wrong. No, Major Investor. So I'm your host, Will. I'm here to help you explore uh, what you want to talk about. Um, let's see. Um, see if I can do some dance. No. Big thumbs up. Big thumbs down. Okay. So these are free for you. And it's supposed to be informative. I'm going to try and make it as informative as possible so that you can't follow it and won't understand a word I'm saying. Isn't that perfect? It's awesome. Um, are we talking about investing? Are we talking about real estate? We are talking about what is going on in the market right now. We took a big downturn and it's looking like a bear market. We also have tax loss selling. So it's a bad time of the year for a new COVID variant. A whole bunch of concerns. And what should I do? What shouldn't I do? Um, and here's the disclosure part. I am an informative broker. Okay. I can't tell you what to buy. I can't tell you what to sell. I can't tell you when to buy. I can't tell you when to sell. I can give you projections. I can give you, if you give me some information on yourself, I can tell you where you should invest, where you shouldn't invest, but I can't tell you what to buy, when to buy, where to buy, and when to buy. Nobody can time the market, and brokers cannot tell you the same idea. What they do is they give you strategies so that you can take those strategies, go home with those strategies, think about those strategies, and then they implement those strategies based on what you tell them to do. They don't tell you to buy, sell, or hold. Analysts tell you this is a good time to buy, this is a good time to sell. But again, the decision is all yours. You phone the broker, you tell him, I want to sell my shares. He advises you it's not recommended, but it doesn't matter because you're paying them. Bottom line, right? You're in the driver's seat. Things are going by you. Someone jumps out in front of you. You're going to wait and call an analyst to see if you should stop or not. Boom. Oh, should I stop? Oh, crap. He's dead, I think. Same thing. Okay. So the disclosure is you can't hold us accountable. You can't hold me accountable. All I'm giving you is information. You decide what you want to do with that information. Um, Real estate, gold. These are hedge funds against inflation. Are they good buys? Gold's awesome buy, but it's being manipulated. So I was in gold. I like gold, but I didn't do so well in it. Uh, didn't do very well in gold. So, but gold is a good commodity to buy on the upside. Welcome, Wing. Good to see you. It's always good to have someone pay attention to what's going on. Thank you. Appreciate it. Salamapo for all those that are Tagalog. Like to give a big thumbs up. Hey, as your host, it's always good to see everybody on board. See what everybody's up to. Hey, there's my son Aiden. He's not a major investor, by the way. He's just taking advantage of investing, right? In the markets, right? Yeah.
Can I bring this to school tomorrow?
Yeah, you can bring that to school. Thanks for not coming and bothering me while I'm on live.
I'm watching a game. my grandma's down here, so
Give a little emojis. We'll give a little wave. There we go. Thanks for participating. So again, I'm just trying to give information on what's out there, what not to do, what to do. So we have a bunch of things on here to talk about. One being me biting my lips, trying to find the right angle. Is this a good angle? Wow, my hair's a mess. My shirt, this is my Sunday shirt. It's work shirt. We're in the house. Like I said, these videos are free, so please like, subscribe, and add your comments at the bottom. Tell me you'll like them, don't like them. They're not very informative, but again, this all stems back to what is appealing to you. What do you find attractive or unattractive, or what you like to see, what you don't like to see, how informative these are. Like stop loss selling. Everybody's asking me stop loss selling. What the hell is that? And you should have a plan before you buy shares of anything. And I recommend shares over real estate only because you get more bang for your buck, and you take zero risk. Okay, guys, zero risk when you do stop loss selling. So basically, it puts the brakes on potential downfalls. So let's say you got money in a stock. It's doing really well, right? It's up 10% where you bought it. Should you sell it? If you're in a day trading routine, yes, absolutely. Take your profit, sell it. Maybe it'll go back down. But you take that risk if it starts to take off. But real estate investing, just like investing in real estate, it takes time. The reason why you invest in real estate is the dividend that it provides you. Residual, let's say this, residual income. Okay, you buy for residual income. It gives you a monthly dividend. If it doesn't give you a monthly dividend, then you have to offset that dividend. So let's say you were to buy a share of a company that invests in commercial real estate. Okay, that commercial real estate only does real estate for doctors, lawyers, and practitioners. Okay, you are going to make money, right? Everybody dies. Everybody needs a lawyer to handle the people dying, and it needs medical. So doctors, nurses, all those facilities for family doctors, for physicians, and for x-rays and ultrasounds, everybody needs those, right? These are something that's not going away. So you invest in those type of real estate investments. They're going to go, are they going anywhere? No. Are they going to go up? No. Are they going to go sideways? Probably, but more than likely, unless they do what? Buy more real estate that deals with only lawyers, practitioners, and they got 25 to 30 years that they're going to make money on these companies that are going to pay them every single month, every single year for 25 to 30 years, guaranteed. Right? Every lawyer, every doctor wants their own office, home practice, so they got money coming in. So it makes sense. We invest in those type of stocks. You make money. Do you make money hand over fist? No. For instance, if I bought, let's throw Oxford out there. And Oxford trades on the NASDAQ. If you were to buy Oxford and they trade at $4.12, and you're able to buy 15,000 shares, what would be about 50 grand? Okay, 15,000 shares, 15,000 shares. Every time it goes up a dollar, you make $15,000. Not bad, eh? And they make $1.59 a share, which means they are extremely undervalued according to their charts. Now, the chart tells you how much it's worth, how much is invested, and then how much they return. So, okay, so the dividend is actually small, right? 42 cents per year. Okay, that works out to 3.5 cents every month. So 14,000 shares, three and a half cents is not a bad chunk of change. It's almost $400 in your pocket. Okay, every single month. Now, if you were to go out and try and buy property for $50,000, that's an awesome deal, right? Most of us that want to go and buy property that flip it, $100,000, $125,000, $130,000, $140,000. The reason why is because you want to use that money to go and buy it, you have to have it in cash. So in order to get a great deal from the bank wants you to pay for it all up front. So they want the $150,000, $160,000 up front for the house. Then you get to take possession of it because it's a foreclosure or a seizure, property seizure, because someone was a bad boy and they got no other choice but to seize the home because it went into default. No one paid the taxes for more than 3 years. So then the house becomes yours after you pay all the fines off. And the lender has a contributing factor with the state. They give you the property based on the fact that you're going to pay everything off today, but they give you that deal. Okay, so if you just stuck that money instead of having to stick that money into buying that house, that's a foreclosure, which means it probably doesn't have toilets, no workable sinks or plumbing. Everything's beat up or the ceiling's missing. Okay, or all the above. And then it's going to cost you. Got to get a plumber in, got to get a finisher in, got to get a hardwood floor. Got to get some hardwood. Someone who knows a lot about hardwood floor or tile. Someone who knows about roofing. Someone who knows about ventilation and proper HVAC furnace. Okay, those things you must need before even thinking about taking on that venture, because those things are going to cost you an alarmist rate if you don't know nothing about it. And then you're going in there thinking, oh, I'm just going to turn around, fix this house up. It might take you 4 months to fix that house up. By the way, every month you have to look at it as a mortgage payment that you would be making on this property. Even though you paid cash for it, you have to look at it as a loss every single month that it's not on the valuations and on the market. So having someone in real estate, exactly, a wife or a friend or a friend of the family or somebody that you can trust in real estate to give you a good deal when it comes to selling your property. Now, whoa, hold on a minute, put back the reins. Let's go put some pants on, find out how many different hats I need for this. You need 8 to 9 hats. Okay, but if you buy a real estate company, 1 hat and a plan. When do I get in? What's my risk tolerance? I'm telling you 10% is your maximum risk tolerance when you buy first time. 10%. So let's say you buy Oxford. I'm not telling you to buy Oxford. I'm just saying you could buy Oxford because it's such a small margin. You're able to buy Oxford. And Oxford's a capital company, by the way, who lend money to mortgage lenders, who lend money to capital markets for the purpose of real estate. So even though it's not real estate, you're still investing in real estate through Oxford. So they're offering you, like I said, $4.10, $4.12. They're offering you to buy in and they're going to give you 42 cents on the dollar every year, 3.5 cents every month that you make payments to. That's awesome. Reason why it's awesome is because there is huge upside. Um, their earnings per share is $1.58. They're giving you 42 cents. That means 75% of the company is used to refinance their company. So that means they have 75% that they can put back into the marketplace, buy your shares from underneath you, or buy more real estate, or buy more businesses that lend money to mortgages. It's huge upside potential for the company. The company could be easily at $30. That's 10 times, almost 10 times your money. So think about it, 14,000 shares at $30. Pretty good nest egg, wouldn't you say? And you want to know why? Because it's $1.58 a share per earnings. That's earnings per share. That's huge. So if you looked at it and go, what's 10 times 1 point? That's $10, $15. 10 times. What do most of these trade at? 16 times earnings. So if you think about it, there's your target cap. So you go 2, that's $32. So we're not far off, right? So market cap would be around $25 to $26 at fair market value. That puts it at pretty much par. That would tell you that unless they're giving you a 9% yield, that you wouldn't stick any more money into it after that. But if they went and put more yield to work for you, and then they said that they were buying real estate to offset the capital, so that would give them more leverage on investments. And that's exactly what it would do. That's basically, it would fight with anything that they had to go with or provide for the inflationary worries. And that would give you huge potential offset to the company. That would be a big thumbs up to you, to the investor. Okay, that would tell you that it's worth putting more money into it, and that your dividend is even more secure than it was before. And their dividend would go up exponentially because of the market capitalization is higher. So you get more money on your return. Does that make sense to anybody? So, like, if we looked at other companies that are out there, they give you higher dividend ratios, like Microsoft, Cisco, Apple. They don't give a dividend, but what they do is they give you share buyback plans. So even though it's not a dividend, it is a dividend. You understand? So like Microsoft, they pay a dividend, but it's not very high. Royal Bank pays a huge dividend, $4. But at $90 or $98 a share, you need to be a multimillionaire to buy them to get any money back out of them. Because 50,000, let's face it, $50,000 doesn't add up to a lot, right? Wouldn't we agree? If you're at $100, that's 5,000 shares. At $4 a share, that's what? Okay, I'm going to say something. Okay, we go with another company that's U.S. NASDAQ, and it's Suro Capital Corp. Okay, they pay, get a load of this dividend. They make $8 and what does they make? $8.28. They're trading at $12 right now. Okay, they pay a dividend of $5.97 currently. So they make 8. They pay 5.97 cents a share. They pay quarterly. They just paid their dividend. The stock took a bit of a whack because they missed estimates by 76 cents. They made $9 a share prior to. So now they took a 76-cent deduction. Still puts them at a huge, huge discount compared to where they're trading before. But their valuation is insane, and their dividend is even more insane. So let's say we wanted to buy Oxford, buy it for 2 more months, hold it for 2 months, sell it, the whole thing, buy Suro, SSSS, on the NASDAQ at March 10th. March 15th, we're guaranteed to get our dividend. We hold it for the whole month, then sell it as soon as we get the dividend. So we sell it probably around 15 to 16, 17, $18. Sell it, buy Oxford. Now we're able to buy even more shares of Oxford. We got a bigger dividend plus, so we buy even more shares of Oxford. So we're looking at, okay, we bought 14,000 shares last time. We're going to buy probably close to 17,000 to 18,000 shares this time. Hold it for 2 months, sell it, buy Suro again. Okay, because every 3 months we get $1.49 per share of Suro, unless Suro starts to take off.
I can't take this because people want this.
People want that. That's interesting. So there's my twist on
I can't bring this to
investing
school.
and why invest in real estate. And I hope you like it, and hope to see everybody soon. I'm just trying these things out, see if anyone I can get is interested in possibly going fishing for new information on how to make money and have it sit in your pocket collecting and make more money doing what you love to do. Baseball, cricket,
And Dad, you know I can't watch movies anymore, right?
b-ball, or basketball,
Dad,
or go to a game.
Dad,
Take me out to the ball game.
Dad,
Take me out to the park.
Dad.
Lay me out, flatten it out. Wherefore my feathers and shroud.
Dad.
Anyway, we'll talk to you later. Thank you for tuning in, and I hope to see everybody soon. Make sure you subscribe to the little button down below. Big thumbs up to everybody, right? Say hi. Make sure you post it, slap it. Tell me what you want. We'll try and make it happen. Okay. What to invest? Where to invest? Remember, I can't tell you any of that stuff. That's on your own. You do your own market due diligence. The stocks I gave you, they're great. But if you find something better, well, there's always something better, right? Or if you find something that says negative earnings per share, stay away from it. Means they have to borrow to give you the dividend. Okay, so if you want to put more money in your pocket, you stay away from those companies because chances are they are not in it to win it. They're in it to find more people, better way of investing. They're all struggling. COVID's really put a
Remember to put
headache.
the best emojis.
Yeah, best emojis. There you go. And thank you, and thanks for not speaking out of turn. I really appreciate that. That's awesome. Anyway, enough said on that news, and like to put all these things together for you as much as possible and come together as a group. But with very little people out there that's paying attention, I don't see how that's possible. Anyway, thanks for tuning in, and we'll talk to you later. I'm going to sign off now. I put 24 minutes to work, and I'm hoping that it's not a waste of time. But you never know around here what a waste of time is.